Welcome to a Market Brief special. I'm Caroline Woods, and today we're focusing on the intersection of venture capital and opportunities in new technologies. Josh Wolfe is co-founder and managing partner of Lux Capital, where he oversees investments in over 100 companies in emerging science and tech ventures across areas including artificial intelligence, surgical robotics, smart homes, and virtual reality. With that, we began by discussing how the pandemic has impacted companies' ability to raise cash in the current climate. Watch this.
It's really a tale of two cities. You have the long tail of small and medium businesses in the US, which are really suffering from severe economic destruction, much of which is going to be permanent. At the other end of the spectrum, I think you have really great technology businesses that are going to have access to capital in the venture capital ecosystem. Now, within that, you could bifurcate it between businesses that might have advertised on the New York City subways or on Instagram, these sort of non-essential consumer discretionary businesses, which are likely to get very hard hit. And then you have more essential ones that are focused on, say, biotechnology, semiconductor, diagnostics, automation, robotics, areas that will continue to attract capital.
But when it comes to raising capital, we know cash is king. Will it be tougher for some of these companies? Will they be able to raise it?
Hands down, the cost of capital is going to be higher across the board. And so whether you're a biotech company or a cutting edge robotics or diagnostics company, it's going to be much harder, in part because every venture capitalist is looking at their portfolio and triaging, deciding which ones are the ones that are most likely to succeed and doubling down on those, giving more capital to the winners, starving the losers. And so I think anybody's going to be hard pressed where the returns expectations are going to be lower, the risk is going to be higher, the cost of capital is going to be higher.
How exposed are your portfolio companies to the coronavirus, and what has translated specifically to success for the companies in this current climate that are succeeding?
Well, of our portfolio, there's about 130 companies. We had about 10 on a watch list. A handful of those would likely have succumbed no matter what, either because of operational inefficiencies or deficiencies or their inability to raise capital. A handful of companies also were doing quite well, but surprisingly, COVID proved a sort of positive black swan, a tailwind for them. We have companies like Recursion, which is actually looking at images of cells, healthy and sick, and being able to tell the effect that drugs have. They were able to tell that remdesivir actually was going to be a positive drug that was going to help before clinical trials were even made public. And then you've got a company like Primer that is using artificial intelligence to sort through the thousands of scientific papers that might come out on a daily basis and help surface the ones that actually matter for researchers. So a handful of companies are actually benefiting in the face of all of this chaos.
My thanks to Josh Wolfe of Lux. That concludes today's Market Brief. Stay safe and take care of yourself. Thanks so much for watching. I'm Caroline Woods.